Good morning, everyone. This is Przemysław Radomski, CFA, talking to you on October 18th. And in today's video, I'm going to briefly tell you about what changed and what didn't change in the precious metals market based on yesterday's rally. Basically, the rally took only intraday shape. It didn't last much longer, and we saw a counter trend move after the initial part of the upswing. So the question is, did it really change anything as far as short-term downtrend is concerned? Well, let's take a look at the charts and find out. What you see now is the gold chart. And if you look at what happened during the session and perhaps more importantly, what's happening in today's pre-market trading is that gold erased a large part of the early rally. So it's almost as low as it was even before the intraday rally started. So overall, the rally didn't change much. You can't even notice the impact of the rally when you look at the chart from the broader point of view. Even the short-term downtrend remains intact. Okay, so as far as gold's technical picture is concerned, on its own, it didn't change much. But maybe something changed from the point of view of other charts. Let's compare gold's performance to the one of the USD index. Well, in the case of the USD index, yesterday's decline was much more visible, and today's rebound is so far tiny. If you compare that to what's happening in gold, well, you'll see that gold doesn't really want to follow USD's bullish indications, but it does follow the bearish indications. This tells us that gold really wants to decline. And as far as the USD index itself is concerned, please note that the similar pattern continues. Just as what we saw in September, the USD index is after a decline, okay, and then it's after a consolidation. Well, not necessarily after, but during the consolidation this time. What happened then? We saw a huge rally, a quite sharp one. What's likely to happen next? Well, we're likely to see a sharp rally once again, which would, of course, have devastating effect on the precious metals market, most likely. Of course, I can't make any guarantees, and nothing that I'm saying is an investment advice. It's just my opinion. All right, so as far as gold and the USD index are concerned, they both point to lower gold prices. What about mining stocks? Well, they did rally visibly yesterday, and they are already lower in today's trading. This is the GDXJ ETF chart, but it's the version that trades on the London Stock Exchange. That's why we already have today's prices, even though stock markets are closed in the US at the moment of recording this. As it is the case with gold, the daily rally might have been quite visible, but overall it didn't change the downtrend, right? It's much more profound. And based on today's small move lower, it seems that the decline is ready to be resumed. Please note that this daily upswing ended more or less where we saw previous bottoms. So overall, we could say that resistance is holding unless we see another profound rally, but it seems unlikely based on what I already said about gold and the USD index. And so what else could have impact on junior mining stocks except gold and silver? Well, of course, general stock market. Junior miners are closely related to the general stock market, and while precious metals prices are still the main driver of the prices, from time to time, stocks could have more important short-term impact. So what's happening in the S&P 500 futures? Well, they rallied yesterday, and they are rallying in today's pre-market trading. So this is theoretically bullish, and actually stock futures are attempting to move to their October highs. And now let's right, today's overnight top was pretty close to those. Let's see if junior miners did the same thing. Absolutely not. They are nowhere close their October highs. What does it tell us? It tells us that junior miners don't want to rally either. And since stocks reached a declining resistance line, it could be the case that the rally is over, but that's not the most important thing. The most important thing that even if the rally in stocks is not over, precious metals and mining stocks are not necessarily likely to be affected to a big extent. Why? Because we already see evidence of that in today's and yesterday's sessions. Consequently, we don't really need to worry about the possibility of seeing a rally in the stock market. What's happening in the USD index, in the gold, and in junior miners themselves already point to the continuation of the short-term decline, which, as you may know if you've been following my analyses for some time, is likely to be the early part of a much, much bigger medium-term decline. All right, and that's it for today. Thank you for watching. If you're not yet a subscriber, or you're not even on my free mailing list, I encourage you to sign up. It's in sunshineprofits.com/sign up. And I wish you a very pleasant rest of the day and the rest of the week. Thank you. Bye-bye.